Hello, everyone. I'm Katie Talati, Director of Research at Arca, and welcome to this week's episode of What's Driving Token Prices. At Arca, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. All right, guys, before we get started this week, just as a general reminder, this is commentary. It is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, guys, so this week to start, we have Optimism Token OP. So for those of you unfamiliar with Optimism is a layer 2 scaling solution that uses optimistic rollups. It hasn't seen as wide adoption as maybe some of the other layer 2s that you might have heard of, such as Polygon, Arbitrum. But this last week, or just yesterday, the Optimism token hit the market and immediately sunk over 70%, down 72% actually. So the token was airdropped to over 200,000 wallets, including early Optimism users and active Ethereum users. What was interesting about this one actually is that after initially announcing that they were going to be airdropping tokens to 248,000 wallets, they retroactively removed 17,000 of those addresses as they believed they were gaming the airdrop or farming the airdrop, as some people like to term it. Obviously not the best of market conditions right now to be releasing a new token. So anybody who received, it seems like a lot of people who received the Optimism token immediately sold it. We have yet to see how this one will perform, and hopefully more details will be released on how the token works at a later date. All right. Next up, we have Mirror Protocol, which is a synthetic stock trading protocol built on Terra. Yes, so back to Terra without talking about it, but for those who are not familiar, Mirror actually suffered an exploit over the weekend, and this resulted in 2 million in stolen funds. The protocol is still running on Terra Classic, so if you haven't been following the news, Terra decided to fork its blockchain and have a Terra Classic chain and a new Terra chain, or Terra or Luna 2.0, where UST no longer existed. And so the Terra Classic chain is what Mirror was running on. There's been a lot of problems with that blockchain, such as security. And in this case, the exploit was due to a faulty price oracle on the Terra Classic chain, which was feeding in incorrect UST prices and resulting in an attacker being able to steal $2 million. This is actually the second exploit for Mirror, which saw an exploit of about $90 million earlier this year. That actually went undiscovered for about 6 months. So that one is down 32% as a result. All right. Next up, we have Mutable X, and it's another layer 2 scaling solution. This one specifically is designed for NFT trading and minting. So Mutable is rolling out protocol fees in anticipation of the launch of staking this month. The fee, which doesn't have to be paid in IMX tokens, is going to be split between IMX stakers and Immutable. So although Immutable is introducing fees, these fees are supposedly still going to be lower than gas fees paid on Ethereum for minting and trading NFTs. So if you guys remember from a few weeks ago, I talked to you about the ApeCoin land sale mint and how some users, paid up to 2 ETH just to get their transaction executed on Ethereum. So those minting fees can be very expensive. In addition to this, Immutable announced a $40 million blockchain developer fund with Congregate and an integration with the NFT platform Rarible. Despite all this, the volumes on Mutable X are down 75% month over month, which is likely more indicative of the overall NFT trading market than it is just of Immutable. All right, last but not least, we have Maple Finance. So Maple is an institutional lend borrow protocol, and they just launched Maple staking for their token MPL. So users have two options to stake their Maple tokens, one where they can earn 50% of protocol revenues, and the other where they become the first lost reserve tranche, along with earning yield plus Maple rewards. So basically you can think of it as two kind of like risky buckets. One where you earn a like fairly small yield, but it's like pretty safe because you're just staking to earn protocol fees. And the other where you actually stake to back up the protocol in case somebody defaults on a loan. So in that case, you earn Maple tokens and you earn part of the yield as well on those borrows. So for context on potential staker earnings, Maple's 30-day annualized revenues are 72 million. Maple is up 17% week over week on this wonderful announcement. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.